Many of you guys enjoy when I do videos on the biggest mistakes stock market investors make. You love them, you learn a lot from them, and I really love doing those videos myself because I didn't have anyone on YouTube to show me what is the right thing to do, what is the wrong thing to do, and get ideas from other people. I learned all those mistakes the hard way. I lost money, I believed I was a genius, I had a big ego back then, and I didn't want to listen, and I kind of lost money learning the hard way through my own mistakes, through my own money. But a lot of you guys, now we have YouTube, you're open-minded, and I love sharing those things so you don't have to repeat the same mistakes I made. You could learn from me instead of repeating them yourself, and it could save you a lot of time and a lot of money. And in this video, I'm gonna share the biggest mistake I have ever made in my investment career. And I was dumb enough to make it twice. I made it in 2020 and I made it again in 2022. But now is the perfect time to talk about this because we have another major stock market pullback. It's a very sharp one. Many stocks are trading at a discount. And now I'm not repeating this mistake. I'm doing something entirely different. And I believe it's gonna pay off in a major way over the next few years. So I'm gonna talk about this as I believe many people are gonna make the same exact mistake I made in 2020 and in 2022. And I know that from the questions I'm being asked in the comments in my own investment group and many other places. So I'm gonna talk about this. It's gonna help you out. I don't always share this and they don't get a lot of views, but if you want more of them and if you do enjoy them, all I'm asking is if you could please press the like button and let me know what you think in the comments. Okay, now for 2020, I'm gonna tell you how I made 147%, and for 2022 on how I made 27%. Now, many of you are be surprised. You said you just said you made a mistake. How did you make a mistake and you made money? Well, I believe sometimes you make money in the market for the wrong reasons. Many people, for example, in 2024, they made a lot of money and they believe they were geniuses. And I was talking about this on YouTube. 2025 came in, a lot of you guys got humbled, and now you know you're not such a genius anymore, and you know that investing isn't so easy. And that happened to me too. It happens to all of us. The market is here to humble us, and sometimes you could make money for the wrong reasons, and you could also learn from it. So I'm gonna share what I did and share what I'm doing right now. Now in 2020, I didn't know that COVID was coming. No one knew that COVID was coming. But back in 2019, we had a lot of signals that were flashing a recession. One of them was the yield curve and the ISM manufacturing. They were flashing a recession. So I said, if we're gonna have a recession, why don't I buy a lot of the defensive names? So I bought Coke, I bought Pepsi, I bought Johnson & Johnson, I bought Procter & Gamble. I put in a lot of money into those defensive recession-resistant kind of names. Now here comes March 2020. It was unexpected, and all correlations went to one. Everything went down together. Even the defensive names went down together. But those names, they didn't go down as much as the oil stocks, as much as the cruise line stocks, as much as other kind of companies. So what I started doing is I started selling those kind of Pepsi and Coke, Johnson & Johnson, and I started buying into whatever was the cheapest and the most hated stocks in the stock market. And I bought a stock called Darden Restaurants. Darden Restaurants is a restaurant conglomerate in the United States. They own brands like Olive Gardens, brands like Longhorn Steakhouse, like Bahama Breeze. If you know any of those restaurants here in the USA, they're owned by Darden Restaurants. And this one got hit hard because COVID has closed the restaurants. But I was driving by a lot of those restaurants and they were closed on the inside, but they had it open for drive-through and pickup on the outside. And there were so many cars, I couldn't even drive there to get something to eat. The parking lot was packed. It was absolutely full. Now I looked at that, I said, okay, now they have less staffing expenses. They're still somewhat open. They're still somewhat breaking even, making money. And they have a very high cash position. So why don't I buy Darden Restaurants? And this is exactly what I did. I had an average cost of around $35, and I made around 120% within 4 or 5 months. It was very quick, very sharp. And I felt like a genius. I made a lot of money with Darden Restaurants, and then I sold it. I believe it was around 105 or $106 per share. And then I started trying to see of what could potentially be the next kind of theme, because I believe in the market we have themes. Sometimes it's electric vehicles, sometimes it's AI or whatever. So I had something for, you could say, the climate change and clean energy, and allows it for clean plant-based food. I saw plant-based was an emerging trend. So I bought a company called Else Nutrition, which is a company in Israel that they had the first ever, I believe, plant-based milk for toddlers, no soy, nothing. It was very clean milk for toddlers. And back then we also had a shortage of, milk and shortage of baby kind of products. So that was the perfect storm. The stock went up 1,000%. I made 340 or 350%. I got out back then. Now the stock is a penny stock. It's maybe pretty much going to zero. I don't know what's going to happen. But this is what I did in 2020. In 2022, and this is all documented, all in my own investment group, all the trades. And I also talked about some of them on YouTube. And this one, I was mainly kind of shorting the S&P through put options. So I identified this trend line, and I would short the S&P once it hits the trend line, buy it back when it goes lower. And I did a lot of trades, a lot of options, which I don't do anymore. I don't even touch them that often, very, very rarely. I trade calls or I trade options in general. But that's what I did back then. So the mistake I made in those periods, in 2020 and in 2022, is yes, in 2020, I bought Darden restaurants and then I sold Darden restaurants. In 2022, I was getting in and out. I was focusing on how much money I can make in the short term. But after I sold those stocks, after I sold Darden restaurants, the first thing I had to do, I had to pay a lot in capital gains because it was mainly shorter term capital gains. I got out of Darden. I paid so much in capital gains. But the second thing is, after I got out of Darden, I got out of my oil stocks. I got out of everything that was so cheap. I bought it because it was cheap. Once I got to fair value, I got out. But then I had nothing else to buy because the entire market went back up. And this is something that a lot of people are doing right now, where they're asking me, should I be buying PayPal? PayPal is cheap, man. I'm like, PayPal is the last stock you want to be buying in this pullback. This is the time to be buying the quality stocks, buying the Magnificent Seven, and holding them forever. If I would have done that in 2020, and I bought AutoZone at 800, and I just held on it, AutoZone would have outperformed every single stock I got in and out in this period. I didn't have to get in and out. I just have to buy and hold forever. So you're always going to find the cheap stocks. You're always going to find the value stocks when the market's going up. But once the market goes down, you only get a discount on the quality names 2 or 3 times a century, or I should say a decade. It doesn't happen very often. So it's best whenever you do those things, the first thing you should be trying to do is trying to get exposure to the quality names that are at a discount, buy them and hold them forever. But the second thing that I believe people should do is the same thing that Stanley Druckenmiller did back in 2022 when everyone was focused on the Fed, on the recession. He was looking for the next team, because as I told you guys, every 2 to 4 years, we have a dominant team that takes over the market. From 2020 to 2022, it was mainly led by Tesla, and I would say maybe even other kind of stocks, but mainly Tesla was the kind of dominant one, and many other solar stocks, EV stocks, but the most, I believe the major one was Tesla. From 2022 to early 2025, it was NVIDIA. And Stanley Druckenmiller recognized that in 2022. He noticed AI was something for the future. And when people were just focused on the Fed, he was trying to think for the long term. And he bought NVIDIA at $15 a share. Now NVIDIA is trading at 110. And he did sell it too early, but he made so much money. So from 2022 to early 2025, the dominant theme was AI, and the leading kind of stocks, they were NVIDIA and they were Palantir. Now, it's highly unlikely that you're going to have the same stocks lead the next kind of bull market in terms of a new kind of team or a new kind of sentiment. Maybe NVIDIA is the exception. But NVIDIA and Palantir, they were the leaders. So they're highly unlikely for them to be the leaders again over the next bull run, which is why I try to identify potential leaders in some kind of teams that a lot of people are not thinking about right now, because all they care about is the tariffs and if we're going to have a recession and how much stocks will go lower. And I shared a lot of them with you guys on YouTube. The first one is the robotic stocks. I believe robotics will likely be something major over the long term. And I shared some ideas here on my X. You can go and research them and watch them. And my favorite one is ISRG, which is mainly robotics in the medical space. But I believe it's still kind of expensive and I'm waiting for my fair value. But the second sector I'm bullish on is fintech. Fintech, they're disrupting the traditional banks like Bank of America, JP Morgan. They're disrupting the financial advisory business. We're talking about 20, 30, $40 trillion worth of wealth is sitting in the United States. And a lot of it is within just all traditional banks, traditional institutions, traditional financial advisors. All of that stuff is being disrupted in real time through many different leaders. But again, this is something that investors, they don't care about right now because they only care about the tariffs. But I started buying a lot of the fintech stocks. I bought one last week. It's up 36% since I bought it just last week. So I've been finding a lot of interesting names to play the fintech kind of theme and the disruption of the banking industry. I think this has the potential to be one of the next big teams in the market, and we're gonna have a leader from them that I believe will likely outperform Nvidia and Palantir and all the AI kind of leaders. And the last one I'm looking at is mainly a lot of things within space. So space, I believe, will likely be something major for the future, but I'm having a hard time because I cannot find some kind of space company that's profitable, that doesn't have massive stock-based compensation, and it doesn't really compete with SpaceX or Starlink. I don't like competing with Elon Musk on SpaceX, so it's hard to find a company that's not competing with Elon Musk, but that's also profitable and not killing shareholder value. So a lot of them are too speculative for me, and I'm watching the sector, but I'm sitting out on them. But I bought a lot of the fintech names over the last week, and again, they're up 35%, and I'm still looking at the robotics to see what I could do with them. And I also bought some quality stocks on the sell-off. I didn't buy the cheap stocks. I bought something that I like for the long term, so I can buy them and hold them forever. And if you're interested about knowing what I do, what I'm buying, what I'm selling, everything in real time, I share it all in my own Discord. This is the link if you're interested. But thank you very much for watching. Not financial advice. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.